Don't take this ass-whipping personally.
Conductor, we have a problem. Conductor, we have a problem. Conductor. Don't wait for her, man.
Ain't well, I like it more Madison. Babe. In 36 months, of course, with one of my new investments, I would be making $300 million a month.
EYL season has returned.
This is a movement. This is a phenomenon. These guys are changing lives one person at a time.
You all are the bright spot of real estate and entrepreneurship.
We can. Let's close the wealth gap by working together.
But I won't stop now.
This is education in the flyest form, the flyest level.
Tech, let's make something happen.
We coming blacker than Black Panther 2. If you're a first-time investor, a first-time trader, now is the time. Today is the day.
Capital is the fuel that drives entrepreneurship and business. There is an untapped market in terms of providing capital to black businesses.
At the fight, we watch the floor, we on the floor. We on the floor, yeah.
A boxer makes money when he boxes. A football player makes money when he playing football. New York, real estate, you make money when you sleep. So just in New York alone, I got 9 skyscrapers.
What y'all wanna do?
Wanna be?
Shot.
I know you see me on the video. Love y'all. Y'all mean the world to me. Peace.
Everybody get a hand up for a shot. Detroit right now.
The same place, the same fast. Good things last, like your favorite MC, still making some mean gas. First rap for the plea, prize winner, best storyteller, thug narrator, my style's greater, moderator, big fans for a lot of you haters, commentators, ringside clock, watching my paper, almost a decade, quite impressive. Most of the best is in the S's.
Master investor, and he made you money. Put yes in chat. So, Ian, about to put on the show per usual, and it's our honor to introduce him. When we met Ian, it was at, we were still in the dining room phase of Earnyourleisure, and then, even coming up with the idea to start producing content and doing shows outside of the regular Earnyourleisure programming. And he was the first person to say, I want to do a show. And just developing a network, and it was the first show on the network, Market Mondays, and who knew that it would take off into a cultural phenomenon within itself, and now we at Madison Square Garden, and that was only 2.5 years, right?
Who knew it would pack out MSG?
So,
yeah.
So we want to thank that brother for working with us, for collaborating with us. That's a powerful message in collaboration, and it's a powerful message in what you can do in a very short period of time, man. So we're going to bring out our wonderful guest, Peter Tucker, in a minute. But before that, we got a couple of, shout out to Peter, we got a couple of minutes. So I want to ask you guys some questions. I'll ask you, I'm going to just get right to it. There's a lot of people, we're going to have a lot of high-level conversations, right? Absolutely. Shout out Keys, shout out 19 Keys. But I want to make sure that we start.
Shout out for Keys. Come on.
I want to make sure that we don't go past anybody. There might be some first-time investors here. So if somebody's never invested money ever in their life, right? Where should they start? How should they start? What are some rules, some guidelines to follow so they can get started in 2023 and become a new first-time investor?
If you've never invested before, please say I'm afraid. There's a couple more, y'all. We're gonna keep it really simple. Number one, you have to invest in index funds. So index funds are like an all-star team. So like us up here with Keys and Trap Right, you can't lose investing in an all-star team. Number two, we already know what to invest in because we make every brand on earth popular. Invest in the top 5. What's the number one computer company in the world right now? What's the number one electronic vehicle company in the world right now?
Tesla.
What's the number one coffee company in the world right now? Y'all gonna tell me y'all don't know how to invest? Those are 3 of the best. So if you put 2 tech, VOO, write this down, VTI, those are your 2 indexes. Apple and Microsoft, you only need those 4. And if I made you money, can I get a hell yeah? It's real simple.
Yeah, I'm with you. I feel like the biggest thing is the mindset, right? Before we can even trade, we gotta have the right mindset. And so what Ian's talking about is like, we already know where to invest because we're the consumers of those products. And so most people in here probably have an iPhone. Most people probably, when they went back to work, were drinking Starbucks. Most people are probably using Microsoft Office in their jobs. So you're already investing in it on the consumer side. But the mindset trick, and what everybody takes away from tonight is that we gotta be on the investor side. Why make these companies money when they could be making us money?
Absolutely.
Right? And it goes for anything. I love talking to high school students, and I hope there's a lot of parents in there, but even the clothes that they're wearing. If we look at North Face, right? I walk outside, everybody has North Face on. Everybody got Tim's on. They're all by the same company, right? If you look at VF Corp, that's a company, even Supreme, like that's a company.
Hold on, slow down. That's something who will catch you.
Yeah,
What's the company that owns them again?
Oh, VF Corp. Right?
VF
So
Corp.
they own all of these brands that you're already consuming every winter, almost every summer, and every Thursday if you're a Supreme fan. Why not get the mindset to say, you know what, if I'm gonna put money into the company, let's have the company make me some money. And so we gotta get that mindset shift.
And also, because like I said, we're gonna have a very high level conversation. Ian's gonna present, it's gonna be a very high level conversation when he presents as well. But just starting out, I feel like it's extremely important to talk about the basics of financial planning, budgeting. I would guess that 95% of people here have not put together a budget, right? It's extremely important to know how much money is coming in, how much money is going out. And you have discretionary income. That is the money left over at the end of the month. That is going to be determined how much money you can actually invest, right? You want to do monthly contributions to any investment. That is the most efficient, easy way to go about it. This is why 401k plans are so good and beneficial, because they automatically take money out of your paycheck, and after a while you don't even realize it. But you don't necessarily need a company to do that. You can do that yourself.
What percentage? I'm not a financial advisor.
I know one.
But I know one. By the name of Rashad Bilal. Shout out to Trap. What percentage would you have to put away for investing every single month?
So really, it depends on how much money you have. Like, I don't really like, you could say 5%, 10%, but you might be able to do more, or you might not be able to do anything.
What number would you put in our pre-tax? Have the lead earn?
Well, I think you should always try to invest at least 10% of your money. That's extremely important, right? So it's like long term, if you can just consistently do that on a long term basis over the course of 10, 20 years, then you're generating real wealth. And especially, like you said, if you're investing the money in index funds, ETFs, high performing growth stocks, it's almost impossible that you're not going to make money in a 10, 5-year, 20-year period, right? But the key is to be disciplined. So we're going to talk about trading, but before we talk about trading, you have to master the fundamentals. It's like basketball. Like, you can't, start shooting threes before you make a layup. So a lot of the times people want to skip from point 0 to point 100, but that's extremely detrimental and it's extremely harmful to you, because this is how you lose $20,000, $30,000, because you're just doing option plays and you don't necessarily know what you're doing, and you're trying to get rich quick. So that's not investing, that's gambling. So we're going to give you tools to how to be a better trader and how to invest, but it's extremely important to start out the show, or start out just in your financial journey with being a fundamentally sound person. That's something that a lot of people kind of don't want to talk about because it's not as sexy.
It's not sexy.
But it's very important. That's the real key to generational wealth.
Can we check the temperature in here real quick? How many people got a brokerage account? Raise your hand right now. Oh, yeah, I'm looking at here. That's a good sign, right? 5 years ago, if we asked that question, I doubt that we had 20 hands raised. I agree. And so the mindset part, the budgeting part, and actually putting it in safe investments, like you said, index, and ETFs, and 2 tech companies, is there. So this is the right setting for us.
And as we're going into a recession, this is now the time to load the boat. Next year we're going to have a dip. I know most people are afraid, but any of you who were investing in 2008 or heard about the 2008 crash and wish that you had put money in, I know the long term isn't the sexiest thing, but that's what's going to create wealth. Swing trading will provide you capital for your midlife, and then the trading will provide you money now. So we're going to give you all 3 tonight. And if y'all are happy about that, can I get a love y'all? No, I sound like y'all mean it because I got more money to give away. I love y'all.
So I want to, let's actually bring Peter out now because I want to give him as much time as possible. So Peter Tuchman is, they call him the Einstein of Wall Street. He's actually the most photographed person in Wall Street history. He's been a broker on the stock exchange for I think like 30 years. Yeah, extremely long period of time. He's actually responsible for bringing us on the floor, and that's not easy to do. So it was our first time on the floor, all of us, and Wall Street Trapper, and he was responsible for doing that. And he's just an extremely knowledgeable person when it comes to trading and when it comes to the financial literacy space and when it comes to Wall Street. So when we were having this show in New York City at the Garden, we felt that it was only right to have him, like I said, a legend on Wall Street, come to the show and give some insider insight as far as, what the conversations that we've had with him, the conversations that, we've had when we went to the stock exchange. So I thought that it would be a dope situation to have him here. He was generous to lend his time and come. So I want to give a big shout out to Peter and give a round of applause for Peter Tuchman.
Journey. And so I thought it would be super apropos if I came out here with basketballs that are actual appropriate size for me as a ball player. And I would throw them all in. These balls have been signed by everybody who's going to be on stage.
That's like an NFT right there.
Let's go, New York!
That's been signed by everybody that's going to be on stage. That's like a collector's item right there.
Come on, let's give us that MLBR.
He obviously had a picture in MLB, right?
We need you to help to get it past him.
I got burned. Yeah, let me help you out, man.
Everyone throw one. Everyone on stage sign this ball. Let's go. There's an NFT somewhere in this. Anyway, I am the Einstein of Wall Street, Peter Tuchman. I am honored to be on stage with these gentlemen. Right? I may have opened some of the doors. These men knocked down those doors. Right?
I have to speak. That's crazy. We're good.
We're good. Peter Tuchman. Always a ball of energy, man. So Peter, we're not even gonna waste any time, man. Alright, so like I said, this is gonna be a high level conversation. Peter's on Wall Street, so let's get to it. what do you think are the two best indicators to use for a foolproof strategy in the market, in any market?
So I think it's really important. I've been around, some people say for 137 years. I went to high school with Alexander Hamilton. So I've seen all the movies that have happened. Right, I wasn't around for the crash of 29, but I was there for 87, 2000, 2007, and COVID. So I've seen all the different crashes. One of the things we'll talk about a bunch of different times tonight is that this is the most pivotal generational time to be a student of the market, right? Listen, ladies and gentlemen, everything's on sale, and I know that may feel painful for people who have been investing for a while, but think about it. First of all, the volatility is an amazing environment for a student to learn what's going on with trading, right? But the fact is everything's 50, 60, 70%. If you're a first-time investor, a first-time trader, somebody who's trying to create a future and change the narrative for your families, now is the time, right? One day, today is the day. This is a movement. This is a phenomenon. I'm not here because I got nothing else to do. I'm here because these guys are changing lives one person at a time. This is a friggin' movement, a revolution. Look at this, you know what? Bring on my friend Trapper. Wall Street's starting to look like you now. Right, I'm the only guy out here, I gotta say it. Let's be clear. Call out to Trapper. Anyway, you asked me about the two things. So, within technical analysis, there are a number of indicators. We didn't invent it. I gotta say all out to my partner, my teacher, David Green. He taught me everything I know about technical analysis. Lots of people have been doing it over the years. Everybody has indicators that they like to. The ones that we've been using are the ones that work for us, the ones that work for this environment. This is a different market than I've ever seen before. And any of you, if you've been out here trying to trade, right? There are strategies that work, some that don't. FOMO, hope, right? Listening to Uncle Herbie on the internet for your financial advice, as opposed to listening to these gentlemen about actually changing the narrative and becoming a wealthy person for your future, for your children, and your children's children. We use the exponential moving averages, the 9 to 15, the 30 now. We just put that one, added that one in. The 65 and the 200.
You slow it down. What?
Yeah, what is it?
I'm going too fast, I'm sorry.
They're writing it down, Pete.
Okay. What are the 4 emails that you have them use when trading? Please write these down.
So, technical analysis is basically trying to understand chart movement of stocks. Okay, and the moving average is the price of a stock as it moves over time. Looking back into history for a little bit and then seeing how it is over a certain day period. Okay, and the more significant, the farther a moving average is, the stronger the indicator is. We're trying to establish whether it's a trend, whether it's oversold conditions, overbought conditions. These are the things that put the odds in your favor, the probability that you will be successful at trading as opposed to losing. Right? We know that 9 out of 10 day traders lose, unfortunately, and that's kind of why I'm connected with these incredible gentlemen, because I watched and I saw the dynamic and the whole democratization of the trading community change around COVID, right? Suddenly there were 40 million new traders in the market. And unfortunately, probably about 39 million of those are no longer trading because this is the most ruthless, volatile market in history, right? And so you may be, look, if you're trading on hold, or you're chasing a trade on volume, or you're FOMOing in fear of missing out, and I have nothing against the meme stocks, and I love the degens and that community, that's all fine. But you're either going to be right for $1 or wrong for $50. This market is, look, we've seen this market take down some of the most powerful traders in history. The Bill Ackman took a $430 million haircut on Netflix. Now, can you imagine how he's lost more money than that before? But for some reason, this market made him wake up and go, you know what? This is the best I'm going to get out of this trade. It was a bad decision, right? So you asked. There are moving averages to basically track the movement of stocks. There's a 9, a 15, a 30, a 65, and a 200. Okay? You've got to do your homework also, because you're not going to just learn what I've been studying for the longest time off of just that little bit of information. The other ones that we use are called RSI, Relative Strength Index.
Write this down.
What does that do? That identifies when stocks are overbought or oversold. And these are all calculations that you don't need to even need to understand them. They're calculations, right? They're things called pivot points. You go to Thinkorswim as a charting service, they'll give you those numbers. Because I want to keep this simple for you. This is simple. It's not easy. but it's simple because we're left up to look. Psychology of trading is the hardest part of this game here. Everyone can get into a stock. A lot of people can get out of stocks, but the psychology behind all the chatter in your head, there's no one sitting on your shoulder going, take a profit. Use a stop order. Don't average into a bad trade, right? Don't turn a winning day into a losing day. You made 50 cents, take off half your trade. Move your stop up to break even so you cannot lose money on that trade. What an amazing feeling. You're a trader. You gentlemen are traders. You understand that concept, but for some reason, people like to stay in a bad trade because they don't like to lose money. People will watch. I know, look, I'm a gambler too. I'm willing to bet, I'm willing to gamble $50 to make $200 any day of the week. I'm sure all of you would. Anybody willing to do that? Put up 50 to make 200. But I'm not willing to put up 200 to make 50. Go ahead.
No.
So look, there are lots of things that make a successful day trader, okay? And they're all the mistakes that unsuccessful day traders make are all the same. And kind of flip those things on your head, right? We're going to probably talk about it a little more. It's possible to make money in this market. And I was speaking to a couple people before we started this evening. And I asked them, are you trading? They said, yeah. Are you successful? Well, you know what? I've had four winning trades. I made $100 on 4 trades. And on the 5th trade, I lost $8,000. Well,
that's not good.
They're back at 80%, but their P&L is down $8,000 or $7,400. That's not a sustainable trading strategy, is it? So the point here is, everybody knows baseball, they hit singles and doubles and not go for a home run. Maybe that worked in the 70s and the 80s and 90s. Ladies and gentlemen, this market is, as I said to you, I've been trading for 137 years. I look good for my age. I've never, ever seen a market like this in my life. The last 2 years, the last 2 months, 2022 on its own has been one of the most ruthless markets to everybody, beginners, experienced traders, and the hedge fund managers, right? Stocks are down 60, 70, 80, 90%. Right? As you've seen it, look what just happened in FTX, right? I mean, there are bad players in the game. These gentlemen, I'm here to tell you, are the best players in the game.
Thank
right?
you.
I will endorse them to the end of the earth, okay? In fact, I've actually never endorsed or done a collaboration or gotten behind anybody in my life as much as I am with these gentlemen.
Thank you.
They're the real deal. They're changing your lives if you listen.
One question, can I jump in? Yeah. So if you're doing, can you tell them the order of importance? So you would buy the 200 first, then the 50, then 15, then 9. The longer the moving average is where you'll place.
Well,
if you're doing long term.
It's a harder question than just simply that. Each one of the moving averages is used for a different kind of a trade. Okay, we try to keep it simple. There are 5 trades we do. One is a trend trade, one is a moving average trade, a far from moving average trade. Call out to my man David Green. There's one called a base trade. The trend trade is a trend, and everyone knows what the trend is, right? It's when a stock is going up steadily or it's going down. Just having a stock that goes up is not a good enough reason to just buy a stock because it can reverse. So what you need to do, just to give you a little tidbit of technical analysis, is on a trend trade, if the stock is going up and it reverts back to the 9 or the 15 EMA, which means it's searching for support on its way up. It's kind of like if you're building a building. You don't want a building that you build really fast and quick and it doesn't have a foundation. A trend trade that reverts to the moving averages are like building a foundation for a stock to go higher. So we use the 9 and the 15 on that trade, but the 200 moving day is the most significant. It's called the Wall of China, because it just, when it hits that, on the downside or the upside, there's a 92% probability that the stock is going to stop going down and start going up, or stop going up and start to go down.
That's a big gem. So, yeah. I was thinking, right, for the outlook for 2023, because a lot of times, we'll hear the news, and we hear the Fed is raising rates, and we hear inflation, and we hear the Fed minutes, but we really don't know what it all means, right? And so I just heard there's rumors that they're going to slow down the raising of the Fed rate from 75 basis points to 50 basis points. Can you explain to the audience the importance of that and what Fed minutes are?
Absolutely. So look, it's a little bit of a story. So let's really give you the quick. In the crash of 2007, okay, big financial crisis, which you got to read about it. It was a mortgage story. There were guys selling mortgages to people who could not afford them, and they were packaging them and selling them onto other people. And all the banks that were supporting them went under, right? So that's the crash of '07. The Federal Reserve put $800 billion into the market as a stimulus, as a backstop to failing banks over 3 years, and it took 9 years for the market to get back to even. During COVID, okay, they put they put $3 trillion into the market over 3 months, and we got back to even by August. We were up 20% in 2020 and 28% in 2021. So the market, in the eyes of a complete economic global shutdown. Does everyone remember how bad that was? Yes. We were all sheltered in place, quarantined, people were dying in the streets. Let's get real for a minute, what it was like then. If they had not put, and I know some people don't agree with this, they think that's why inflation happened, but I don't believe that if we didn't put $3 trillion into the marketplace during that time to support a lot of the companies that would have, no one was going on planes, trains, automobiles, no one was doing anything. So all those companies that we depend on every day for our things we consume, we're the greatest consumer generation in history, okay? If we had not put that money up, and I know it contributed to inflation, we'd probably be on bread lines today. That's just my opinion. But you asked, what ended up happening was inflation happened, supply chain issues. The world tried to get back on track. We hit a switch, everyone wants to travel again, everyone wants to build houses, all that stuff. Something had to happen quick. Nobody wants to go back to work, right? There's still people sitting around in pajamas who don't want to go to work. I don't get that. I
deserve to be free? I deserve to be happy? I deserve to be rich? I don't want to go to work no more.
Leisure has been earned.
So, what ends up happening in order to curb inflation, which is a massive influx of money into the money supply into the economy, you've got to pull money out of the system. Okay? Too much money causes inflation, take money out, rolls inflation over. So the Federal Reserve tried to figure out, I'm not sure they're doing the right thing, we'll see that soon. Okay, in order to pull money out of the system, they needed to raise interest rates which were at zero. Who benefited from interest rates at zero? The big growth corporations were able to borrow money. The Googles, the Apples were able to borrow money for free, right? We don't know about that. I know we're not borrowing money for free. But the big companies, the high growth stocks, in order for research and development and whatnot, were able to go to the bank and the Fed and borrow money for free. Suddenly, in order to stop all that growth, the Federal Reserve had to raise interest rates. Those big companies are less likely to borrow billions of dollars overnight and over a week and over a month if they have to pay a VIG for it. 1%, 2%, right? So in order to curb inflation, they started to raise interest rates. What they're doing is a bit aggressive. We haven't given it a chance to work yet. But we are trying to pull money out of the system to get a handle on the fact that we are all paying more for everything. Everybody just had Thanksgiving. Everyone's trying to buy Christmas presents. Besides the Black Friday sales, I'm sure everybody's paying way more for everything in their lives. So they raised interest rates 75 basis points. These are percentage of a dollar to try and aggressively curb inflation. What they didn't do was give the economy a chance to digest and process those aggressive moves. The big companies don't want these 75. They want to get a cap on how much they're going to pay to borrow money. So everyone is hoping that the fact that we just rolled over a little bit on inflation, right, that oil is down from gas is down from $5 to $3.60, that maybe things have signs of getting a little bit better, and then they're going to pivot and raise the interest rates a little slower and a little less, and that will give people a chance, the economy, to process and get back on its feet a little bit. Maybe it'll help everybody who's struggling with money.
Absolutely. Let's clap it up for Peter and an amazing advice.
Write that shit down, boy. He gave some gems. You need to research.
That's amazing. So next we're
do
going
your
to bring
research.
up Dom Peebles. If you familiar with Dom Peebles, please make some noise. Dom Peebles. American history.
Absolutely.
One of the most successful real estate developers in the world. He probably doesn't want me to say this, but when we asked him, he kind of like,
It's not about that.
yeah, but it's important because so many people probably are not familiar with his story, and we need to be familiarized with people that have wealth because it's not only inspirational, motivational, but it can actually steer the direction of where you want to go with your career. You don't necessarily have to be an athlete or an entertainer to reach a high level of success. So, Forbes said that he was worth $900 million. That was 10 years ago. But if you know how Forbes does their recording, you have to cooperate with them. He stopped cooperating with them 10 years ago. So, I mean, you can kind of gauge it from there. Yeah. So, it's very important that we understand, that this is somebody that has reached that level, that $1 billion level, not by any means of athletic ability or entertainment, but through real estate development. And working on building the first Black-owned and Black-developed skyscraper in Manhattan. So, without further ado, we can bring out Don Peebles. Yes.
Perfect theme music.
Cash rules everything around you. Very fitting. Very fitting.
Clap it up for this great brother again.
Yes.
This is a legend, y'all.
Yes. I told him when I met him, my dad brought me his book, The People's Principles, when I was probably a teenager. So if anybody has not read that book, it's extremely good read, and I highly recommend that you read that book. That's one of the must-read when it comes to financial literacy, business, and investing. So thank you for joining us today. Appreciate it.
Great to be here.
So let's get right into it. So how do you feel the investment market holds for Q1 of 2023? Like, what's your outlook for Q1 of 2023?
Time of opportunity. I just heard the Einstein of Wall Street on, and I agree with his concept. But if I think back, history repeats itself constantly. So if you go back to between 1978 and 1981, the Federal Reserve raised the interest rates from 6% to 18%. And the market kept functioning until it didn't, because people didn't catch the interest rates, the economy didn't adjust to the interest rates. But then the interest rates started going back down. And by 1987, I bought my first house, and I paid $925,000 for it, and I got a mortgage on it from Citibank that was indexed with LIBOR, and the rate was 9.25%. So I was able to buy a house, pay 9.25%, and feel good about it. So what will happen is that interest rates were just way too low. So for example, that house, if I were buying it 2 years ago, if I had the same money that I was paying on debt service, which in that instance was almost $100,000 a year, that would have bought me a $5 million mortgage. So the question we have to ask ourselves is, how much does real estate appreciate, and how much does it fluctuate based on interest rates? And interest rates have a lot to do with home values, because people borrow money to buy their homes, and real estate overall is a leveraged business, and so interest rates affect valuation very quickly.
I see Troy over there. I know that look. You sure?
Yeah, man.
I want to ask a question that everyone in the audience wants to know. Let's say we're starting from scratch, and let's just say I was your best friend. How do we get rich in real estate from 2023 to 2025? Is that what you guys want to know? How do we get rich in real estate, brother?
Well, look, I know a little bit how to do it, because I started off with about $600, and then last count, I was at close to $1 billion. I think I've done a bit better.
Clap that up for him. That's amazing.
But right now we have a pipeline and a portfolio of about $10 mentors said that if you owe the bank $50,000, you can't sleep at night. If you owe them $50 million, why should you both be awake? So the idea is to get comfortable borrowing money.
And what interest rate will be great to borrow?
I mean, it does. I mean, I think it's more about income. You can do, look, in the real estate business, at the level that we operate in. So, for example, let's make it easy. Let's take a $500 million building. So a $500 million building, we are going to get 60% in debt. Okay, so that's going to be $300 million. And then that other $200 million is equity. And I won't put up all that $200 million. I'll go to Goldman Sachs or, Apollo or one of these private equity funds. And they'll put up 90% of it, and we'll put up 10%. So I'll put up $20 million, they'll put up $150 million. They are going to charge, if we were doing this right now, they would be charging what's called a preferred return of about 14%. And they'd be looking to earn 25% on their money. So it's really not, it's just the interest rate fluctuation just really affects equity to a degree, except when you're buying very tight deals like cap rate deals on apartment buildings. If you're buying a 4.5% cap rate, interest rate is 6%, and that's a tough deal to make because you're not making a spread. But real estate's all about leveraging, and so your cost of capital is, one function of it, but it's also what is the market value of the asset. The challenge with residential real estate on right now for, say, buying homes is people's buying power has been diminished significantly because most Americans buy homes with mortgages. And so their buying power has been cut in half at a minimum, and sometimes more. So 6 months ago, 8 months ago, somebody could buy $1 million home if they were making $100,000 a year. Now they got to look at a $500,000 home, and so their mindset's not there. So that would lead somebody like that to rent. And so what happens is when people can't buy, they rent. Or they can't buy what they want, they rent. And so the rental market will continue to get stronger as interest rates go up. But what will happen also is how home values will go down. And so right now, we're in a time of this uncertainty. No one kind of knows what's going to happen. But the fundamentals for real estate are very good. Unemployment's very low.
Yes.
Income and salaries are high. Wages are high. There's a backlog in demand for products. So every element of the economy fundamentally is good. So it's just, are people willing to pay what it costs to buy, or will they pay a little bit more to rent and wait until there's another time? So right now, our strategic direction is that we're focused on buying, we're developing rental properties now. No, we did condos before. Now our real focus is more on rentals, except at the ultra high level, and then people are buying in cash, so they're not interest rate sensitive.
So during COVID, there was this mass exodus. Everybody was leaving New York. They said prices too high, rent's too damn high. I know you have real estate, obviously, developments out in Miami. The affirmation tower is going to be here in New York City, right? We just had a midterm election. Our governor's still in place. I wonder what your thoughts are the future economy of New York and why it's so important that the affirmation tower is here.
Well, New York is one of, if not the greatest city in the world. So there's always a demand for New York. And what's happened is there's another generation of people who want to come here. New York got a little bit more affordable. And also, most people in New York rent. 75%, everybody who lives here rents. And so the idea that the condo market has softened up just means that the developers who can't sell those condos will now put them in the rental pool. So New York is getting younger. And I think, look, New York used to be, up until really Bloomberg came in, it was a city about creativity, a city about excitement, a city of diverse people, a city of different walks of life, financially, just a unique melting pot. And then Mike Bloomberg, over 12 years, made it almost a Beverly Hills, and it became a money-centered place. And everything was about money. It was about money. And so property values ran up. Especially Mike Bloomberg if I were looking to make money today, I'd be looking to go into markets where there was a demand, an unmet demand for apartments, for example, rental housing, or single-family housing, and buying some houses and renting them out. I'd be going to places like Fort Worth, Texas, Dallas, Texas, Nashville.
Nashville.
I think Jacksonville, Tampa, Tucson, Arizona. I mean, places where it's tax-friendly, high quality of life, and more businesses have moved there. One of the things that's going to happen, and is happening now, especially with remote working, is the businesses are relocating out of places like Chicago, out of New York City, out of DC, for example, as well, and out of LA, because taxes are so high. And so they can save a significant amount of taxes. If you're in an environment where the tax rate is 13%, you go down to Miami, you get better weather, and it's zero local income tax, state income tax.
Let me ask you this: as far as we talk about real estate a lot on our platform, how to invest in real estate, but we don't really talk about real estate development too much, and there's nobody to talk about that better than you. So if somebody's interested in becoming a real estate developer, what steps should they take? Like, what advice could you give to somebody that's interested on the development side?
I would say become a student of the business, learn the fundamentals. What I learned about where I got started was I started as a sales agent, so I understood how to market. I learned how to market. And then I became an appraiser, so I learned how to estimate value. So I figured if I could estimate value, I could go out and create value. And so those are the things that you get started by learning the fundamentals of the business. You don't have to be you can be a contractor too, but you don't have to be an engineer. You don't have to be a finance major. You can understand the basic fundamentals of real estate, which is marketing and understanding value. And you make your money in real estate going in. When you buy real estate, you make the money there, and you realize your profit.
On the price when you buy the asset.
Yeah, exactly. And then you can go in and create value. So with development, it's all
Can you talk about that as far as making money on the front?
Absolutely. So you want to buy, if you think about this, imagine real estate is a 12-hour clock. The ultimate time to sell is 12 o'clock. So from about 1 o'clock until 4 or so, you want to be kicked back and a spectator. Then around 4 or so, you start looking for the opportunities. And then you start buying. And you buy all the way up to about 9 o'clock. And then at that point, you start looking to sell. So if you buy, and you want to buy when fewer people are buying and it's hard to buy.
What time are we at right now?
Oh, I think that we're probably at about 3 o'clock. 3 o'clock, 3:30.
Noted.
And look, I think that the thing is that there's opportunities everywhere. So I remember back in 1991, 92, during the junk bond crisis. Banks were failing. They were closing. In 1989, there were 300 and some odd banks closed in 1 year. And then in 1990, another 300 banks closed. So they were liquidating all kinds of assets. So I started buying assets in downtown DC, and I was buying stuff at 20 cents on the dollar or so. And my view was, I didn't need all kinds of scientific charts. I didn't need any kind of real calculation. I felt that the nation's capital, the most powerful nation in the world, would come back at some point, or the money wouldn't be worth anything anyway. So I loaded up and bought everything I could. And that 20 cents on the dollar, when I started selling at 80 cents on the dollar, 90 cents on the dollar, I was making 4 or 5 times what I paid. And if you leverage it, then you're making 600 times what you made.
Is that amazing? Please clap it up for that. Number one, what are the 5 cities, in case they missed them, because I'm sure somebody was on Instagram sending a DM saying that this should be here, right? So what are the 5 cities you would have us investing in? And let's say hypothetically I had like 5,000 amazing friends that were investors. How can we put our money together to get in some of these commercial deals so we can build wealth together?
Well, I think the first thing is where I would be investing is I like Florida because it's got strong fundamentals, no state income tax, a growing economy, and a good quality of life overall. So Miami's very stimulating. So you got a what are the emerging cities in Florida, and that's Jacksonville and Tampa. Those are the two strongest markets in that.
Please write those down.
Then if I were going to go Texas, great fundamentals, no state income tax, decent, pretty good weather overall, and very business friendly. But Austin has been on fire.
Yes.
So where do you go? You go to Dallas, you go to Fort Worth. Those markets are still, growing, and they're underserved. And then Arizona, Scottsdale, Phoenix has always done very well. Tucson, sleeper, I'd go there. And then Nashville and Memphis, no state income tax, and Tennessee, quiet as it's kept. And then, look, I'll tell you how strong no state income taxes are. When Jeff Bezos started Amazon, he did it in Seattle, Washington. Bill Gates always stayed a resident of Seattle, Washington. Washington State has no state income tax. But those would be the markets that I would focus on. And I would look real hard at LA, because I think that LA bounces back. It's a resilient market. It's, it's got an industry that is going to run in perpetuity, the entertainment industry, and it's got technology. And then New York. But I would say New York is real early right now. So I'd be waiting on New York. And look, I think that one of the things that we have been looking at is how do we empower people, especially people of color,
yes,
to be able to reap the benefits of economic growth through real estate on a larger scale. And just to give you a sense, this analogy I gave where I put up the 20 million and a Goldman Sachs, someone put up 180 to do a $500 million building. Well, our buildings generally are going to make somewhere of about 40 to 50% return on cost. So say that it made 50% return on cost after we developed it and stabilized it. That's 250 million profit. Well, the way that would work is that we get about half that. So we would get 125 million on that $20 million investment. And so you can do the math on that. It's over a 600% return on our money. So that's all about leverage. So
no, clap it up for that.
So it used to be back in the 1980s, real estate, commercial real estate was powered, especially office buildings and hotels were powered by real estate syndicators. So real estate syndicators would go out and buy an office building, chop it up into 1,000 pieces, and sell it off in pieces. And the investors would get the tax benefits from it, and then they would get the rent income and the appreciation. When the banks all failed in the late 80s, early 90s, and the tax law was changed in 1986 to take away those depreciation rights and so forth, the syndicators went out of business essentially overnight. So we are looking at how do we make access to doing and investing in, say, an affirmation tower accessible to a larger group of people. And we're working on doing that now. We're considering a platform that's somewhat like crowdfunding, but a bit more liquid. But I think there are some ways now, like for example, we are looking at investing in some REITs. So SL Green, which is just built one Vanderbilt office building right at Grand Central Station, the most successful office building in the marketplace. Their stock is down, 75, 80%. And Vornado, which owns the Farley Station, which is the historic building across the street from where we are now on 8th Avenue, and they own all these office buildings above Penn Station and Madison Square Garden.
Yes.
Their stock is down 70 or so percent. So that's another place to play as well, because the market has penalized them heavily. And that's another way to invest in larger scale real estate. But overall, it hasn't been accessible. And so people have to become entrepreneurs themselves to do that. And that's a bit harder, but I would say that the way you start in the development business is do a house or two. Buy an apartment building and renovate the apartment building and release it up. Buy a condo in a market that's emerging and it's an old building and renovate the apartment and resell it. That's a way to get started, and then you start scaling it up. But the thing about real estate, though, is if you're going to get into development, you got to think big, and you got to be willing to scale up quickly. So think about the first building we developed was in 1989. I started on that in 86. That was $10 million. Affirmation Tower is $3.6 billion. So we got to scale up.
As you're talking, I'm just thinking to myself, as you look at the landscape, and we always talk about building generational wealth, and we know one of those ways to build it is through real estate. As you look out at the landscape from your position, looking at the new developers, people, the agents, the realtors, how encouraged are you when you see us in this space now? Because I would imagine 40 years ago when you were starting, it didn't look like us. And I was looking at the statistic actually. It said in the second quarter of 2022, the home ownership rate of white households was 75%, compared to 45% of black households, 48% of Hispanic households, and 57% of non-Hispanic households of any other race. And so, are you feeling encouraged? Like, what is your thought from the landscape, from where you're sitting at?
I mean, look, I'm encouraged by what you all are doing. I mean, I think you all are the bright spot. What happened is, during the 1960s, we all were fighting, my parents and my grandparents and all of our parents and grandparents were fighting for civil rights, basic civil rights, access to universities, access to, accommodations, and access to educational institutions. And then in the 1970s, we got it. And so what happened is that prior to that, the best and brightest of us were entrepreneurs in many instances because we couldn't get jobs. No one would hire us. So we would create businesses and serve our communities in those businesses. What happened is, and then those of us who went to college went to historically black colleges by and large. So what happened is, in the 70s and 80s, that changed. So we didn't become as entrepreneurial, we began to get jobs, better paying jobs, and that was the goal. And so what we do, real estate is an entrepreneurial business, and it's severely underrepresented when it comes to black Americans. Home ownership rates for black households is lower today than it was in 1968 when Dr. King was assassinated. So, and in fact, in Boston, the average household net worth of a white household is $250,000, and the average household net worth of a black household is $8. And so what that is that we haven't been entrepreneurs. So there is a tremendous opportunity, though, for real estate entrepreneurship. The thing about real estate, and everybody ought to appreciate this, when you go out to raise, if I've got an app, if I've got some technology, etc., it's not a hard asset. So I got to go and find friends and families to help get it started, and then convince people to put money into it. And real estate is a hard asset that can be valued. So you are going to be 70% already on the way because you can borrow 70% in debt. And so it's easier to get started as a real estate asset owner because you have this hard asset. And then once that asset is appreciating, at the same time, if you own a rental building or a rental house, you're collecting rent, it's paying down your mortgage, paying down your debt, and the property is appreciating over time, and so you're getting an equity buildup that is pretty quick, and you'll ultimately be able to borrow against that too. So where I think there's no better time for us to be in real estate, it is the #1 business in this country overall.
Wow.
It's the number one business in America is real estate, and the biggest wealth generator.
Clap that up, please. The College is in the real estate business. Are you guys loving the information that he's sharing? He's giving us amazing gems. I want to cut into my time to keep him here longer. Is that okay if we get more gems from him? And when we stay to the end, I'm going to do something I haven't even told him that I'm going to do. But can we keep him on for a little bit longer? Surprise time, right? Stand up. Stand up, please. Say, we can close the wealth gap by working together. Say it again. We can close the wealth gap by working together. Y'all not loud enough. Jersey, where we at? We can close the wealth gap
Close the wealth gap.
By working together.
By working together.
For everybody who is from New Jersey who bought a ticket tonight, I will put you in Stock Club for life. Participate. Jersey, where we at? Shout out to New Jersey City, Parsippany, West Orange, East Orange. I'll be out there. Jersey, where we at? Okay. And I'm gonna put y'all on Slammer for life. The new one and the old one. If I made you money, can I get a hell yeah? Say we love you, dog. Say it like you mean it. Say we love you. Thank you.
Yes.
God, we love you.
We love you. I lived in East Orange.
Really?
And I went to Rutgers, Newark.
Wow. Shout out to the Jersey fans. So this is all we like.
Shout out to Jersey. All right, let me ask you this. So, is there anything that you think specifically would be smart to invest in into 2023, and vice versa? Are there things that you would not recommend to invest in going into 2023?
I mean, I think that I'd be cautious about financials. Like if I were going to be investing in the stock market, I'd be cautious about financials right
Don't
now.
tell me that.
Yeah.
Give us some gems, please.
So, I'd be looking, but I'd be cautious. I would clearly be looking at airlines, but cautious. But they're still under capacity. I'd be looking real hard now at the hotel market.
Really?
A lot of people are traveling. Hotel room rates are up. Stratospheric. And so I'd be looking there. I tend to invest pretty much in what I know. I've done well. I mean, I bought Tesla early and well, and ripped it up and, constantly up, and a little bit pullback here and there. But I think, technology to some degree. But I also be looking at, right now, the fact is that there is a untapped market in terms of providing capital to black businesses.
Absolutely. Please talk more about that.
And if you think about this, I got the Business Icon Award. It was aired last night from the GRIA.
Congrats, that's amazing.
There was two gentlemen who were part of the trip committee to you.
Troy and Rashad from Earnyourleisure.
You might know them.
And I brought up in my acceptance last night that there is $83 trillion invested in venture capital and private equity right now. And less than 1.3% of that money goes to women and people of color combined.
You said 83 trillion?
83 trillion and 1.3%. So that means, so think about this for example.
Women and people of color, so that's Mexicans, that's Indian, that's every single person.
That's the vast
the whole
majority
world.
of
So
So think about this, 98.7% of all venture capital money and private equity goes to white men. So the vast majority of the country is fighting to try to get access to start a business, build a business, expand a business, and they're fighting over 1.3%. And so our answer, so when, it used to puzzle me when I was starting my company over why I didn't see greater, more black people. And I would always wonder, well, why is it? Is it something we don't know? Well, yeah, it's something we don't know, and it's that we don't get fair access to money, fair access to capital. So it's like, capital is the fuel that drives entrepreneurship and business.
Say that one more time, that's a great quote.
Capital is the fuel that drives entrepreneurship and business. It'd be like me saying we're going to drive from here to East Orange, New Jersey, but we don't have but a 10 cents of gas.
East Orange, make some noise.
It's unreasonable and impossible to expect me to get from here to East Orange with 10 cents of gas.
Well, it's unreasonable to expect any of us to grow our businesses or start one without any money. And until our financial system is made fair, we're going to see these inequities. And so I think there's a tremendous business opportunity. I tell these heads of banks and so forth, you don't have to go to Southeast Asia or Eastern Europe to look for an emerging market. You got one right here. Black people. Start treating us fairly. Start providing capital.
So how do you crack this code to raise more capital? Is it a strategy or insight that you see, or do we need to like grab Peter and have him do all of our deals?
What we need to do is what you said earlier. We have to work together. You close the wealth gap, like you said, by working together. So pooling our resources and working together. Not seeing each other as competitors, but allies.
Yeah, say it again. Shout out to allies too.
You cannot look at each other. I do not look at another black business person as a competitor.
Yes.
I see him as an ally and a colleague and somebody I'm rooting for. And that's what we got to do. We got to root for each other.
Make some noise for the legendary Don Peebles.
Make some more noise for him. That's not often. And we're going to build on that to show how to make money. Two reasons. Well, the wealthy don't always reveal what they're doing, and then also he doesn't want to put himself to be in jeopardy to say that he influenced or was a market maker and manipulated the market. So listen, even while he's giving these gems, he's still being defensive. Okay? Troy and Rashad, over the last 24 months, what were two of the best trades that you guys have made, and if you want to share your percentages, so then I'm gonna get to the bag talk.
I'll start. I said it on Market Mondays like 2, maybe 3 months ago.
Yeah.
Obviously during a recessionary time, we gotta look for small wins. And one of those things was oil.
You have those? All the wins you sent me be big.
I'm just gonna tell you the percentage.
Gotcha.
Yeah. So I was researching oil, and I was looking at companies. Obviously some in America, obviously some domestic, international. And I was looking, breaking them down, doing my research. Like I say, I always encourage people to do it. I stumbled upon Marathon Oil, and everything looked good. The fundamentals look good, the technicals look good. I said, you know what, I'm gonna make an option trade deal on this. So I made a call on it, and I feel like right before InvestFest, or maybe right after InvestFest in August. And it was a great call because obviously we saw the short Israel. We already knew that winter months were coming. We already knew that there was conflict in Ukraine and Russia. And then the OPEC news came.
Yes.
They were cutting barrels to 2 million barrels a day. So I said it on Market Monday because I already.
Can you tell them what the ticker is for those who don't know?
Marathon Oil, I believe it's MRO.
MRO. Write that one down, please.
MRO, yeah. So that actually worked out to 137% gain.
Clap it up for that.
And so if you were at the Apollo,
yes, billboard material.
Yeah, and I told you. So when I go into some of these investments, I usually, after I've done that type of research on it, I'm usually doing nothing less than 15,000 when I put it. So I guess you could kind of put 15,000 that on the light end times 130.
Write that down.
137%, and it was a nice little come up during the recession, I would say.
That's why you got that nice ass suit for that.
Well, it's money green for the money team.
Hey, let's go. Rashad, what about you?
Yeah, so I'll talk about SMH, and I know you're going to talk about the trading. So I want to talk about defense too, because so it was a good option call, and I think I was like 250% on it. And
clap it up for that.
What I really want to speak about is I sold it, and the reason why I sold it is because I feel like you have to be able to see the future before it actually happens, and you have to be able to read the tea leaves. So me just being observant, this was about 6 months ago. I kind of saw the direction that the economy was headed in. You know what was one of the major things that actually showed me that we were in an economic downturn?
What was the catalyst for sure?
We go to Atlanta a lot. Shout out to my guy Marcus and Alex and all those guys.
Yeah.
Circular CEOs, so we buy all of those bottles whenever we go out.
Yeah.
But they were telling me that the nightlife was slowing up, and I started to see it. So when I saw that the nightlife started to slow up, I understood that the people at the top that were spending that kind of money, they wasn't spending that money anymore. Then I started to look at it a little further, and then I saw the unemployment was rising. Then I saw that so many people were leaving their jobs. So then it started to just make me nervous about where we were headed as a country, right? So I was calling and I asked a few people whose opinion I actually respect, and they told me something that was very valuable. They're like, well, you're up 200%. Is it better to, lose everything or gain another 100%? Meaning, like, if you go up 300%, would you sleep better knowing that, okay, I lost out on a potential 300% rate of return? Or would you be sick to your stomach because you was up 200% and you tried to be greedy and ended up losing everything? So I think it's extremely important to understand when to get out and when to exit positions. So for me, it's like if I'm up 50% on any position, then I feel comfortable taking half.
Write this down. If you're up 50%, you feel comfortable exiting that?
At least half of my position.
Yes.
Because now at that point in time, I pretty much have the money that I came in with.
Yeah.
Right? So you really can't lose it at that point. And then when I'm up 100%, now I'm really seriously looking at exiting the position, especially on the options trade.
Yeah.
Because you have to understand that, it could go up 1,000%, it could go up 500%, but especially in this economic climate that we're in right now, you have to take wins when you can find them.
Absolutely.
And even if it's 20%, 25%, 50%, or 100%, that's better than losing every single thing.
Absolutely.
Going back, and now you just like, you're trying to figure out what happened. And then the problem with losing money is that you're always trying to make it up. So if you lose 20, now you're trying to make it up, and then you're making irrational decisions because you're not thinking clearly. So knowing when to exit a position is extremely important. Like I said, there's really no set science to that, but you have to read and watch the news and educate yourself, and like I said, pay attention. I wasn't really joking about that Atlanta thing. I was actually serious because that was a precursor to what actually happened.
What year? What month was that?
It was like a winter.
Gotcha.
Like, you know what I mean? So it was.
Was it a cold day in Magic City? Got to do market research.
We support black business.
Research and development. Tax revenue. But all of these different things, like I said, you could look at like sneaker sales.
Yeah.
You could look at a lot of these things that you don't necessarily think about, but this is an indicator of the economy. And because what that is discretionary income.
Yes.
So no matter how you look at it, whether it's bottles in the club, whether it's sneakers, whether it's trips, whatever that is, that's money that you don't have to spend.
Yeah.
So when you see discretionary income start to slow up, you start to see things that people are spending money that they don't have to spend, they're cutting back. That's an early indicator that we're in trouble. And if it's not fixed, then it's going to start to spiral out of control very soon. So just being in touch, being in tune, and just seeing the spending habits of consumers can give you the tea leaves of what will happen in the future.
I love it. How much time do I have?
Yeah, you got time.
All right, so I want to go through the short-term stuff, long-term stuff really quick because I cover that every week on Market Mondays. If you love Market Mondays, can I get a hell yeah?
Yeah.
So write this down. The sites to research stocks and investing. Number one, wallmine.com. 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 Number two, macrotrends.net. For those of you who can't write fast enough, or if I go fast like Peter, you guys will have this slide for you, okay? That's a good one. Matt, thank you, man. I appreciate that. You see how his face lit up? That helped him get that 160 he's talking about. Number three, gurufocus.com. Number four, macrotrends.net/charts/economy. So if you ever want to know what's happening in the economy in real time, that site will tell you. Number five, Dataroma. Dataroma.com. Say Dataroma. They like, man, get to the bag. I don't have this long-term shit. Holdingschannel.com. Holdingschannel.com. And the last one is whalewisdom.com. Let's get to the money talk. Y'all ready? Y'all want to get to the money talk or y'all want to do long term? I want you to write this formula down. 12 trades times one easy target times one big target. You only need 12 trades to freedom. Anyone here ever wonder what targets you should use endlessly? No, all these are new. So for the Dow Jones and NASDAQ, your short target is going to be 215 points. So this is an easy target. This is a layup. Fellas, say layup.
Layup.
So any day in the market can go up or down 215 points, and I'll tell you what this means in dollars. Write that down. Your big target is going to be 523 points. Say 523. Say, I came here to get rich. I want to be free. I'm going to get rich in the next year. So the number of shares or contracts and futures that I want you to trade, write this down, 27. So Troy said that he likes minimum 15,000 to be in. So if you trade the Dow, what's 27 times 500? What amount is that? How much? Okay, and if you have 27 contracts and it's $1,000 per contract, how much is that? So the NASDAQ costs $27,000. The Dow costs $13,500. I appreciate you. You only need 12 trades. So your first two trades, I want you to use your short target. So your first two targets, you will make $29,025. Your second trade, you will make $29,025. If you were able to make $29,000, let's say next Friday, would that make you happy?
Yes, sir.
Jersey, if you were able to make $29,000 next Friday, would you be happy? So what I'm gonna do for Jersey? No, be louder. Floyd came to get the bag. Tom came to get the bag. I'm gonna help y'all get the bag too. Stand up with me. I'm gonna help y'all get rich. If I can help y'all make 29,000, say yeah, make me 29,000. Those are your first two trades. Trade number 3. Write this down. Through 10. Your profit will be $70,000.65. $70,065. Anyone in here want to trade to be able to make $70,000?
Yes, sir.
Now watch the no. Jersey, do you want me to come to Park Symphony and Weehawken and help y'all make $70,000? Thank you. So trade number 3 through 10 will be for $70,000, and then your last two will be for your small target back at $29,000. So 2 small targets to build confidence, right? Because we've all been in the market and taking trades and was like, damn, if I would have taken profit early, I would have done a lot better. Trade 3 through 10, I want you to trade a larger size. Go for a bigger target. Does that make sense?
Yes, sir.
Then, to close out the game, your last two, I want you to go back to that $29,000 target. So if you make $29,000, 73 through 10, and your last two are $29,000, how much is that? The first person to answer, I got a prize for you. How much? Tell me, how much? Okay, let's do this. Add this up. 29,000. Thank you. Come to the stage. Don't awe me. I love y'all. Come. Floyd just told y'all we ain't competing against nobody black. Right? I'm gonna do some stuff for y'all, I promise you. How many of you wish you knew when to get in to be able to take advantage of these moves?
Yes, sir.
Because a lot of this shit sound good, but then when you actually go to place your money in, it's like, yo, you said that's the part, right? It's like, that sound good, Ian. Ian may talk with you and Peter, but I get in and I end up losing. Anyone have that feeling? Jersey, would that be a good feeling? So what I'm going to do for Jersey And for anyone else who wants to stand up and act like you want to be financially free, how about me and the dream team give y'all a free session, no selling on the back end or front end, and we guide you into how to make this trade and hit 29,000. Yes, sir! Oh, now y'all want to talk y'all fake jersey in that. Right? The 10 stocks that I like, please write this down. Apple, Microsoft, Google, VOO. I know, we're short on time. I want Ashley to kick me off. We got more bag talk. Apple, Microsoft, Google, VOO, that is the index fund. United Healthcare. Stryker, for those of you in the medical profession. Okay? Johnson & Johnson, Eli Lilly. That little fake tweet thing is not the reason why the stock fell. Right? Go look at the price that Eli Lilly was before that news came out. Tesla's good. That's towards the tail end though. And we're solid, but we gotta wait till we come out of recession. Now, I will wait. I'm gonna be honest. I can't say too much. But if you see Jack and Zuckerberg, and I'll have shout out to the team at Meta that's here. But if they maybe pick up a company and do a partnership, you'll see the thing fly.
What up, Meta?
Right? Tech, I'm getting to it. Visa, ABBV, McDonald's, Starbucks, Procter & Gamble. I'm gonna read these again. Apple, Microsoft, Google, United Healthcare, Johnson & Johnson, Eli Lilly, Tesla, Visa, ABBV, McDonald's, Starbucks, Procter & Gamble, Stryker. Name me how much you gonna pay. No, tell me how much you gonna pay. And, no. This is a lesson. This is a great business lesson. Well, no. Say that again. Say it again. Come up here and give me $1. Because this is the thing. When someone makes you an offer, hold on. When someone makes you an offer, you always want to start low and then move up. I got y'all. Y'all know I get the prices anyway. Well, where you from Jersey? Well, where you from? What part of Jersey you from? Shout out to Patterson. Patterson, make some noise. You know I ain't gonna charge you a thing. What's your name? I'm not charging y'all nothing, man. This is what I'm gonna do. I'm not gonna put it on Market Mondays. But for y'all, for all these stocks, I will give y'all the prices for 3 months for free. I can go sell out. Now let's get to the pineapple juice part. Peter, come out here. Oh yeah. I can go sell out and go to Goldman. Y'all, I can sell out and go to Citadel, but we are the fund. So when I'm telling you I'm giving my prices, and I need y'all too, I'll never leave y'all. I never liked when people of our color got to a certain place and acted like they were better than anybody else. I'm y'all and y'all are me, especially if you're from a certain environment, right? But I want to give Peter credit because he's going to open a lot of doors for us to be able to work and partner with these firms, right? All of you. So I do want to ask you, because I know your time was cut short, what's, honestly, the 3 things that we need to do to get an edge to be able to make, and this is me saying it, not Peter, this is Ian Dunlap of the Red Panda Rebellion. This is not a reflection of Earnyourleisure LLC or the earners, just me, to make millions of dollars in the market. And don't give the answer that we got to give to the public. Let's talk like it's me and you on the phone and me and you text.
So I think I mentioned it a little bit before, is that this is the most pivotal time in the market to be a student. right? Whether you guys are already investing, guys and girls are already investing in the market. First, we've got a market that's on sale. That's a great time.
Well, what if they're afraid that the market is on sale? That sounds good, and then things fall apart.
So, Ian asked me earlier, what are the great trades to make? What are the great stocks to invest in when the market is in a recession, when the economy is in a recession? And I said it has nothing to do with that. It has to do with the education to find out the best way to trade this kind of a market. Markets go up and markets go down. There's no,
How long will it take them to get good in the market? If they dedicate 12 hours a day?
3 to 6 months.
Can you dedicate 3 to 6 months to get good in the market? Jersey, can you dedicate 3 to 6 months? Jersey! This is what I'm going to do. Everybody in Jersey, if you bought a ticket and you're from Jersey, I'm going to make sure we hop on once a month, and me and Dream Team look out for y'all, and I'm going to go through 3 sessions.
I'll even join that team.
Make some noise, New York City. Stand up. Brooklyn, stand up. Bronx, stand up. I don't want y'all to do. It's time to get rich. If y'all can't get rich,
time to get rich.
I can't promise to it.
We got something special right there. And believe in something before we break.
Shout out to Chicago. Chicago, we in the building. Indiana, we in the building. Indiana, Chicago, I'm gonna add you to that too. Y'all need to stop close somebody. Final gym. Final gym.
It's in Virginia, but
final gym that I want to hear. Number one, real quick, because we're short on time, we got a special guest we on. There are 3 indicators that I want you guys to look at, but the 2 most important ones. Number 1 is the Benner cycle. The Benner cycle is the greatest tool that I've ever seen as an investor to be able to predict a recession in advance. So call 2005, call 2008, it called, well, this one is going to happen in 2023. Right? 2033. So you can go for a 100-year pattern to see when to literally load the boat on the best assets in the world. Please say Benner cycle. B-E-N-N-E-R. Benner cycle. And also, if you want to know the price to load the boat, similar to what his is, I've never talked about this before, but I like the 191-day moving average exponential to know on a high-quality company, only top 50, to know where to buy. You can set your pending orders there, and you guys will be good. Real quick, I deserve to be happy. I deserve to be rich. I deserve to be wealthy. I deserve to be free. All of y'all are capable of doing this. Make some noise for yourselves. Yeah! The greatest group of investors on the planet. I love it.
So we got done yet. So we had the champ Floyd, and like I said, y'all know where we from, 914, and we was always the underdog in this fight.
Yeah. 914. Yeah.
It was a few people that gave us a tremendous amount of pride growing up, and one of the greatest lyricists of all time. Last time we was in this building, we saw an epic performance.
Yes.
So
you know how this been on, baby?
When we was coming back, we had to bring the champ out himself. So everybody on your feet for Jada Kiss. Let's
And make some noise.
The champ came with the chandelier.
Listen, he is one of the greatest investors and business people of all time. He does not have to be here, but he loves us and the culture. Say, I love you, Floyd. Thank you for being here. Let's go.
Well, thank you for coming, brother. I appreciate this, man.
How was the game?
This is dope for us.
Appreciate
man.
you.
So
I should have gave my little money away way faster.
Yeah, it might be different.
Like, man, give away that watch.
It ain't gonna be as impressive now, Ian.
So I want to get right into it, Floyd. So I'm a fan of the sport, and I'm a fan of like boxing. I actually watch boxing. So let's talk about this. You changed the game when you bet on yourself, right?
Yes.
I believe you brought yourself out of your contract with Bob Arum for $20 million. I think it was before or after the De La Hoya fight?
Well, no, I bought myself on my contract at that particular time for $750,000.
Okay.
And then once I left them, with the Manny Pacquiao fight, the Canelo, and the McGregor, I made $750 million from 3 fights.
Clap it up for that.
So what made you want to buy yourself out of the contract? What made you have the vision to become your own boss? Because now, it's easy to see it, but at the time, it wasn't, I think Bob Arum didn't think it was going to work. He had some comments about that, right?
I just had vision. I didn't want to just... I'm sorry. Well, I had vision, and I didn't just want to be promoted in one area. I wanted the money to be spread out so I can be promoted all around the world.
Yeah.
I wanted to be worldwide. So I think they kind of had me in a chokehold, and I didn't want to be in a chokehold, so I took it upon myself to buy myself on my contract and gamble on myself and to become my own boss, and that's what I did.
In the biggest way.
I love it.
Floyd, now, your dad showed you around the ropes in the ring. Obviously, your late uncle showed you the ropes in boxing as well. But I'm interested in who showed you the ropes in business, right? We hear about Al Heyman. He's one of those guys we've never seen. How did that relationship develop? How'd you foster it?
Well, actually, how I met Al Heyman. A lot of people in this room, you guys need to do your homework. So everyone should know Al Heyman. This guy is a shrewd businessman, unbelievable, just mentor. He's like a second father. So for years, I kept hearing his name, kept hearing his name. He wanted to get involved in boxing, and he's just like myself. He's a chess player. So his ultimate goal was to get the fighter that he seen, that he knew was going to be the biggest, and then he knew that all the rest of the fighters would follow. And then once that happened, of course, we started off as he was my manager. Then eventually we became business partners, and now we have somewhere upwards of 400 fighters.
Wow, that's incredible. I was first introduced to your work ethic in my hometown. There was a fighter named Angel Man Freddie that you kind of dog walked, right? So shout out Angel. Shout out to everybody from East Chicago and Gary. Hey, let's make some noise. But I've always wanted to ask you this question because I'll talk to everyone here about mastering their craft and being consistent.
Yes.
In your prime, give me the honest answer, brother. How many hours a day were you working on your craft to be the best in the world?
I can't really say. The hate, the jealousy was a part of the motivation.
It fueled you?
Yeah, I mean, I needed it. I needed the doubters.
Yeah.
That made me push and work extremely hard each and every day. Floyd can't do this, he can't do that. But my ultimate goal was just to pull my mother out of poverty.
Yeah.
Help my grandmother, put her in the back.
Clap it up for that. That's what it's about.
I think the people always see just, the flashiness.
Yeah.
But it took a lot of hard work from
dedication.
So,
dedication.
I had my first fight in 1987.
Wow.
1987. Every day, I really have to take my hat off to my father. Great businessman. I love him to death. Because if it wasn't for my father, I wouldn't be where I'm at. My dad told me, the first thing he taught me, the less you get hit, the longer you're going to be able to last.
Defense first and investing too.
Yeah,
listen.
Actually. And every day my dad would go out and hustle. Of course, my dad, because his career didn't turn out like he wanted his career to turn out.
Yeah.
So my dad would hustle every day. But one thing that my dad, he took time out every day to take me to the boxing gym.
Wow.
And from 1987 all the way to 1993, my dad was working with me. Then eventually, he caught a case, a federal case. Yeah. He went to prison, and I kept working hard, went to the Olympics. After the Olympics, I moved to Vegas, started working with my Uncle Roger. Yeah. And nothing happens overnight. We took our time, we worked, we pushed and we worked, and we broke records.
Listen, they saw you running 2 years ago.
Well, I'm gonna tell them a story. So this is extremely important. I want to talk about discipline and work ethic, because that's true in anything you do, right? No matter what, you have to be disciplined and work ethic. And I don't feel anybody is born disciplined. You learn discipline. And the crazy thing is, the first time I ever saw you was like 3 years ago. I was in Miami, and I was driving. It was probably like 12 o'clock at night, and we was coming from a restaurant, and I was driving back to Fountain Blue to get changed to go out to the club. Literally, this is just a random Friday, 12 o'clock at night. And I'm driving, and I see somebody running opposite of traffic.
How many years ago was this, please?
It was like 3 years ago, that's what I'm saying. So I see somebody running opposite of traffic, and as I get closer, I'm like, it's Champ. It was by himself. And it was so crazy because you weren't training for a fight. You were actually already, I think he was already retired. But it's like you're running up hundreds of millions of dollars, 50-0, not training for a fight, and you're still running at 12 o'clock at night randomly in Miami. So it's like, talk about that level of discipline and commitment, because they see the jewelry, they see the chain, they see the lifestyle, but I don't think that they understand the commitment that you've put in for your whole entire life.
Well, my philosophy, I just look at it like this. When you just look out here in the world today, you have Mexicans support Mexicans, Puerto Ricans support Puerto Ricans, Dominicans support Dominicans, Chinese support Chinese, Japanese support Japanese. But when it comes to blacks, we tear each other down.
Yeah.
And so my philosophy has been never stop getting it. So when you look at Bill Gates, you look at Warren Buffett, you look at these guys, and you see these guys, they can be in their 70s, 80s, and you can look at the Waltons family that own, Walmart and Walgreens. They can continue to make money when they're 80, 90. But we never had nothing to say. When I go out and do just exhibitions, or I come do speaking engagements, or I make an appearance, then it's like, oh, Floyd Mayweather is hurting for money. No, it's just that retirement for everyone, for each and every one of us, is different. My retirement is to do what I want to do.
Yes.
As long as I'm happy.
Clap it up for that.
Keep doing your thing, my brothers. 914 Westchester. Yeah! New York.